Most people think trading is about gut feeling, watching charts and making bold calls. But there is a group of traders who do not guess. They build systems. They write code that execute faster than a human can blink. And they use math to find edges the naked eye cannot see. These are quantitative traders. And in this series, I'm going to show you how to become one, step by step, from the foundations of quant trading all the way to building AI-powered trading systems. Whether you are a complete beginner or a trader who already knows the market, this course is designed to take you further. This is ICOS Digitals, and I build trading bots. And this is Module 1. So, what is quantitative trading? Quantitative trading, or quant trading, is the use of mathematical models, statistical analysis, and computer algorithms to make trading decisions. Instead of a human reading headlines and deciding to buy, a quant system analyzes thousands of data points and executes trades based on predefined rules. Think of it this way. A traditional trader looks at a chart and says, "This looks like it's breaking out. Let me buy." A quantitative trader writes a rule. If the 10-day moving average crosses above the 50-day moving average and volume is above the 30-day average, buy. That rule runs automatically every seconds across multiple assets. So what are the three pillars of quantitative trading? The first is data, and that involves the price history, volume, order flow, news sentiment, and on-chain data. The second is the models, and that involves the mathematical rules or statistical relationships that predict price movement. The third is the execution, and that involves the automated systems that place, manage, and close trades based on model signals. Everything in quant trading comes down to these three pillars. You need good data, a model that finds patterns in that data, and a fast system that executes on those patterns before the opportunity disappears. Here is the honest truth about human trading. We are emotional, inconsistent, and slow. We hold losing trades too long because we do not want to be wrong. And we exit winning trades too early because we are afraid of giving back profit. We get tired, distracted, and make different decisions at 2 a.m. than we do at 9 a.m. A quantitative system has none of these problems. It follows its rules exactly every single time, at any hour, across any number of markets simultaneously. These are the 5 advantages over manual trading. The first is speed. Algorithms execute in milliseconds. No hesitation, no delay. The second is consistency. The same rules applies every time, removing emotional bias. The third is scale. One system can monitor hundreds of assets at once. And the fourth is backtesting. Strategies can be tested on years of historical data before risking money. The fifth is objectivity. That is, decisions are based purely on data, not fear or greed. There are many types of quant strategies. We will go deep into each of these in later modules. But let me give you a mental map right now so you can understand what the landscape looks like. So the first is the trend following. So if an asset is going up, bet it continues up. If it's going down, we bet it continues down. The next is mean reversion. So if an asset moves too far from its average, we are betting it's going to snap back. The third is arbitrage. So in this case, we are trying to exploit price differences for the same asset across different exchanges. The next is market making. So what we are doing here is placing buy and sell orders simultaneously, and we are then trying to profit from the spread. The next is the statistical hub, and we are trying to use correlations between related assets to find mispricings. The last is the HFT, and in this case we are trying to execute thousands of trades per second to capture tiny repeated edges. In crypto specifically, and especially on Solana, you also have strategies like copy trading, sniper bots, and MEV extraction, which we will cover in depth in Module 4. How do quants differs from algo and AI trading? One thing that confuses a lot of beginners is the relationship between quant trading, algorithmic trading, and AI trading. These terms are related, but they are not the same thing. Quant trading rules and strategies are based on math and statistics. The human defines the logic. In algorithmic trading, there is automation of trade execution. The computer follows the rules at high speeds, while in AI trading, machine learning models find patterns in data that humans cannot see. The model defines the logic. Think of it as a progression. Quant trading is the foundation. You need to understand the math and strategy before you can automate. Algorithmic trading is the engine. It runs your quant strategies automatically. AI trading is the frontier, where the system learns and adapts on its own. The entire course follows that progression. We start here with quant fundamentals and we build up step by step until you are building AI driven trading systems. Quant trading is not some exotic concept used only by hedge funds in New York. It is everywhere, and you probably interact with its effects every day in the market. Renaissance Technologies, one of the most successful hedge funds in history, is entirely quantitative. Their medallion fund reportedly returned over 60% per year for decades using pure mathematical models. Two Sigma, Citadel, and Jane Street, they are also all quant shops. But here is what is interesting. The rise of decentralized finance and on-chain trading has opened up quant strategies to individual developers like you and me. On Solana, a single developer with the right bots can extract value from the market in ways that were impossible 5 years ago. So what are the crypto quants in the real world? Example is the copy trading bot, which mirror the wallet of consistently profitable traders automatically. Next is the sniper bot, which executes buys within milliseconds of new token pool going live. And also is the arbitrage bot that finds price differences between Jupiter routes and across dexes. And the next is the MEV bot, which reorder or front-run transactions using Jito bundles for profit. These are all quantitative strategies just applied to crypto and DeFi context. And that is what exactly we will build in this course. People always ask, do I need to be a math genius to do quant trading? The honest answer is no, but you do need to be comfortable with logic and willing to learn. You need to understand the basic math concepts like averages, percentages, and ratios. And you also need to have willingness to learn to code and the understanding of how the market works and patience to test, iterate, and improve. You don't need a PhD in mathematics or in finance, and you don't need to have years of programming experience. You don't need millions of dollars in capital or a Wall Street background. In this next episode, we will start working with actual price data, reading candlesticks in code, calculating basic indicators, and understanding what makes a signal. No prior coding experience is required. I will walk you through every line. That's it for episode 1. You now understand what quantitative trading is and why it has an edge over discretionary trading and how it fits into the broader landscape of algorithmic and AI trading. Here is a quick look at where we are going in this series. Module 1, which is where we are. So we are talking about the foundations. That is, what is quant trading, how the market works, and the key concepts. For Module 2, we will be talking on the quant strategies. That is, the indicators, backtesting, and the performance metrics. Next is the algo trading. So we will be building our first bot and exchange APIs and then some execution logic. Then the next is the crypto and DeFi. So in this case, we want to learn about DEX trading, the sniper bot, and some MEV strategies. Then last, which is the AI trading. So we'll be speaking on some machine learning signals, sentiment analysis, and some LLM powered agents. If this was helpful, subscribe and hit the bell. Every episode in this series builds on the last. And if you are already building on Solana and want some ready-made tools, check out Change Circle at changecycle.xyz. That is where I list all the bots and dApps I built. See you in episode 2.